Hello everybody. In this session 39, we are going to discuss one more problem on mergers and acquisition. So we have seen in the previous sessions the theoretical aspects of mergers and acquisition, journal entries to be passed in the books of transferor company and transferee company, and amalgamated balance sheet, and also the theoretical aspects. So we have solved one problem. Then in today's session also we are going to take up another problem on mergers and acquisition in the nature of merger. So let us go to directly the problem. Problem number 2, that is on mergers of companies. So we'll just have a glance on the problem, then solve the problem. P Limited acquires Q Limited for a consideration of 9,50,000 to be satisfied in the form of fully paid up equity shares of 10 each. The balance sheet of two companies on 31st 12 2018 and the date of acquisition were as follows. So they have given the information that P Limited acquires Q Limited. That means P Limited is going to purchase Q Limited. So the balance sheet of A Limited and B Limited as on 31st 12 2018 information is given. So the liabilities of A and B Limited as on 31st 12 2018, the share capital is given, that is 10 lakh, 6 lakh 25,000 A and B Limited respectively. Reserves are there. We have the current liabilities are there. We have current liabilities and also the assets. So the total of liability side is 24 lakh of A Limited and 14 lakh 50,000 of B Limited. Then there is an assets also. So the assets here we do have the tangible assets is 24 lakh and 14 lakh 50,000 of B Limited. Sorry, current assets. Uh, the total of assets side is 24 lakh of A Limited and 14 lakh 50,000 of B Limited. This is a given. And in case of the notes, additional notes given in the problem is notes to accounts forming a part of balance sheet. Share capital constitute equity shares of rupees 10 each, that is 10 lakh for P Limited and 6 lakh 25,000 for Q Limited. Then reserves and surplus, we have seen the previous, the total amount is given. So that is divided into general reserve, development rebate reserve, export profit reserve, surplus statement reserve. The amount is given for P and Q Limited. The next is they have asked us to, you are requested to pass the necessary journal entries in the books of P and Q by assuming amalgamation in the nature of merger. So they have asked us to pass the journal entries in the books of P Limited and Q Limited. So let us go directly to the solution. So in this problem, they have already given the purchase consideration. You need not calculate the purchase consideration. The amount of purchase consideration is given, that is 9,50,000. Directly we'll go for the journal entries. So journal entries in the books of Q Limited. So the closing entries in the books of Q Limited, firstly we are going to write. Then the opening entries in the books of P Limited we are going to write. So the format of journal entries, you know, debit, particulars column, ledger folio column, debit side and credit amount. So the first entry to be passed is being assets transferred. So we are passing the journal entries in the books of Q Limited. So being, because Q is going to join with P Limited. So P is going to acquire Q Limited. So hence we are going to, so this doesn't exist. This Q Limited doesn't exist in future. So all the assets is taken by the P Limited, and the purchase consideration is to be paid by P Limited, uh, P Limited to Q Limited, by P Limited to Q Limited. Then coming to the first journal entry to be passed in the books of transferor company, being assets transferred to realization account. So the realization, all the assets of Q Limited, all the assets to be transferred to realization account 14 lakh 50,000, amount 14 lakh 50,000, and liabilities to be transferred to the realization account the 4 lakh. You can see in the balance sheet in the previous slide is there. Just show 14 lakh 15,000 is given. So here is a balance sheet. You can just see the total of assets is liabilities is assets is 14,50,000 and liabilities is also 14,50,000. So here we have taken this amount of here. We have taken this amount here, that is the 14,50,000 and the sundry liabilities is 4 lakh that we have taken. The next is the P limited being purchase consideration due. Being purchase consideration due, P limited account data to realization account. 9,50,000 you need not calculate, it is given already given in the problem. Directly take 9,50,000 rupees, 9,50,000, that is for being purchase consideration due. Next is the being loss of realization account. So here in this journal entries you have seen, that is the debit realization amount is 14 lakh 50, credit realization 4 lakh, credit realization account 9 lakh 50. So you can total here. So 9 lakh 50 plus 4 lakh, it's 13 lakh 50. 13 lakh 50 minus debit balance of 14 lakh 50. 1 lakh is the loss. So you get the realization loss. So hence that realization loss has to be transferred to the equity shareholders account. So that the entry we are going to make equity shareholders account data or 1 lakh to realization account. That is total debit column minus debit balance minus credit balance. So equity shareholders account data or 1 lakh to realization account 1 lakh. So next journal entry to be passed in the books of Q Limited is the being shareholders fund transfer to shareholders account. That is equity shares 6 lakh 25,000, general reserve 75,000. That means whole general reserve as well as equity shareholder whole amount have to be transferred to equity shareholders account of Q Limited. So all you are transferring, that is total equity shareholders account is 10 lakh 50,000. Being shareholders fund transfer to shareholders account. The next is being purchase consideration received. So what amount we are receiving, that is equity shareholders shares account data 9,50,000 to P limited account 9,50,000. Then we have to close the equity shareholders account. That is the equity shareholders account data 9,50,000 to equity shares 9,50,000. That means equity shareholders are going to get the purchase consideration amount in the form of equity shares. Hence, we say we are going to close the equity shareholders account of Q Limited. Equity shareholder account data 9,50 to equity shareholders account. Next, journal entries to be passed in the books of P Limited. So P Limited journal entries to be passed. So what are those? We'll see. So the same format. Firstly, first entry to be passed for in the books of P Limited or transferee company is being purchase consideration due. So being purchase consideration due is purchase business purchase account data to liquidator of Q Limited. That means we have to pay to the Q Limited. So Q Limited ಗೆ ಎಷ್ಟು ಕೊಡಬೇಕು 9,50,000 purchase consideration ಕೊಡಬೇಕು. That journal entry we are going to take first. The next is for incorporation of all the assets and liabilities and general reserve of Q Limited. So the sundry assets 14,50,000, general reserve 2,50,000, two sundry liabilities 4 lakh, statement of P&L 2,25,000, development rebate reserves is 25,000, export profit reserves is 1 lakh, and business purchase account is, that is purchase consideration is 9,50,000. So totally all the assets, liabilities as well as purchase consideration together the P Limited is going to take of Q Limited that we have taken. So that is being incorporation of assets and liabilities and surplus and difference in debited to the general reserve. So the balancing figure will be debited to the general reserve. The next is liquidator, that is being purchase consideration paid. So you are going to pay to Q Limited, liquidator of Q Limited account data 9,50,000 to equity shares capital account 9,50,000. So this is journal entry to be passed in the books of the transferee company, that is P Limited. Thank you.